let's quickly go across. We have Parthiv Jhonsa joining us. This is, of course, on several pieces playing out within the metal space. One in particular being the JSW Steel development that happened yesterday. Parthiv, let me keep this open-ended first to start off. What do you make of this investment by JFE, and what does this do from a fundamental perspective to a JSW Steel's balance sheet? Give us a sense of that.
Hi, thanks for having me. Good morning.
Good morning.
So, just to give you a small brief, this is it's a practically win-win deal for both the parties involved, GFE at one hand and JSW Steel at one hand. The entire enterprise value of the deal is structured around 53,000 odd crores, wherein JSW Steel, via say slump sale and the tranche two, and also the debt, which is basically going out of BPSL from the books, they'll be getting almost what 37,250 odd crores. That's a net amount. So this amount JSW can use it to basically reduce its leverage basically. So right now their leverage was about 79,200 300 odd crores in H1, which can eventually go down to almost about 50,000 crores, which will have a positive impact on the bottom line. Number one, or they can use it to basically ramp up their upcoming projects, say at the 5 million ton at Dolvi and so on and so forth, at a much faster pace. So they can basically deploy this cash as and how, and they have a complete freedom to do that. So it basically gives them a certain runway going forward. What is done does for GFE is that they can get entry into Indian geography, which is basically the fastest growing ferrous market globally right now. Where Japan is growing at a very certain bips on a year-on-year basis, and where the growth has been capped. For them, for GFE, India is like the largest market. So what has been said and done that after Japan, India will be the third works for companies like GFE. If you see, as per World Steel Association, where a couple of years back when JFE entered, took stake in JSW, JSW was a very small part. Today, JSW has actually exceeded as a total installed capacity compared to JFE. And for JFE, that is actually a natural progression to enter a very fast growing market. Second, what it also does is JFE gets the technology for JSW. So, you have these value-added products and all, which you require a certain, global technology. JFE can get that technology to India, and where technology and innovation will be a part of, will be responsibility of JFE, and JSW will take care of the operations. So that's how the entire deal is structured. So it's practically a win-win for both the parties at the end of the day.
Right. Parthiv, the other thing, of course, is what's happening in the overall metal space. Right? With copper at an all-time high, aluminum at a 3-year high. Will this kind of move sustain, you think?
Let me start with copper. Yeah. Copper has its own narration where the prices have been elevated to $11,000 and above right now. There is a certain global crunch, and that crunch is nowhere to go. So we had recently initiated on a company called as Hindustan Copper, where we had actually pointed out this entire thing, that the crunch is going to persist for next 2 to 3 years. If you see last week, say end of November practically, when these Latin American countries went and negotiated with these smelters in China, the TCRCs which were hovering around last year, it was about negative 80-100, has actually moved to negative 250 to 300 also, and some of the contracts have been done at negative 450. So the crunch is nowhere to go. The global timeline to develop a mine has been about 15 to 17 years, a greenfield mine. So the crunch will remain, and at such a time, companies like Hindustan Copper, which is actually adding capacity, will play out, will be positive for them, right? Because they'll be able to ramp up much faster than the global counterparts. Now coming to aluminium, aluminium at $2,850 $2,900 level it's actually on a higher side. I think it should cool off about $100 to $50 kind of a number, because what happens, aluminium is the second largest usable commodity or a metal after steel, right? You require almost about 80-90 million tons of aluminum on a yearly basis. Number one. When aluminum goes through the roof, it basically gives an affordability issue to a lot of aspect, right? Because you have started using aluminum in every walk of life, so affordability starts kicking in. So I think this a very high price of this 2850 2900 is a good thing, especially for our entire domestic aluminum sector. But it should basically cool off to about say $2650 $2700 level, because what has happened, the entire cost curve has moved to about 2400, 2200, 2400 kind of a level. So even at 2650, 27, people like the companies will still be making money.
China, Parthiv, continues to show weakness. Market seems to be pricing some bit of optimism here. Give us your take. What's your sense on what's likely to play out?
So has actually lost you in between. Is it possible to repeat the question?
So China continues to show some bit of weakness, right?
Yeah.
Market seems to be pricing in some optimism there. Your thoughts?
So I think China has been very dynamic, especially what is happening at the ground level. If you see, I don't think so that a very major stimulus will come in next in a very immediate term. But yeah, over long term, they have to, in order to keep their their growth going forward, they will have to keep on doing some bit or the other kind of a stimulus. So the optimism is around that, in future something will come in. Some kind of a stimulus might come in as we enter next year. Not in say next 1 to 2 months, but once we enter next year. So that's kind of an optimism as far as China is concerned. The only thing is the domestic Chinese consumption of metal, especially steel, is going down, and that is why they have been actually pushing a lot of material globally. If you see this year, the exports are going to hit about 115, 120 million ton, which will be a practically a record volumes. So that is a bit of a overhang, and especially when your Western countries basically close your economy, the other countries to move is basically either Latin America or your Indian subcontinent, right, where they can easily sell that material. So I think the safeguard duty is also equally important. Your deals are equally important as far as your global macros are concerned.
Okay. Parthiv, what should one make of the dollar weakness as well as the rupee weakness? What's the impact of that on Indian companies within the metals pack? So give us a sense of that. Does that at all materially impact them?
It impacts as far as your raw material is concerned. A dollar hitting through the roof of say 90 or so, and your coking coal has also gone up through the roof. We import a lot of concentrate in India. So almost 90-95% of the copper concentrate gets imported in India. So you shell out at the end of the day more money, right? Practically speaking. So that's where it's going to impact as far as the costing is concerned.
And any names that you like within the metals pack, Parthiv?
So if you bifurcate the entire bucket, right, into ferrous, non-ferrous, mining, and say other categories, right? So just to give you a perspective, in ferrous space, we like companies like JSW, JSPL. In non-ferrous, we like say Hindustan Copper. Then in mining space, we like companies like Moil. Then you have companies like Indian Metal Ferro Alloy, which is basically or say either Infa or companies like Jindal Stainless, which is a part of the fourth bucket. So these are a couple of names which we are positive on the growth trajectory. Number one, how the earnings will come in because either they are ramping up the capacity or there is a certain changes which now has finally come in. For example, in Hindustan Copper, that they have extended all the leases. So there is something or the other happening in these names.
Right. Okay, Parthiv, great to have you on the show. Thanks for your time today.
Thank you so much. Thank you.
Let me now welcome on board